Hey guys, welcome back to the channel. Today I want to talk about three amazing stocks that could be potential game changers in your investment portfolio. So these videos take a long time to make and research, so please like and subscribe. And with that, let's get into it. So the first stock that I want to talk about is FICO, and FICO has been dropping for a number of reasons. I talked about this in one of my previous videos last week, but FICO has been dropping because there's talk of moving from a tri-merge system to a bi-merge system, which basically means that instead of using all three credit bureaus, credit scoring systems, Equifax, TransUnion, and Experian, they would move to a bi-merge system where they would use at least two. So this legislation and process is still in debate, but the talks for this has been ramped up, and so that's why one of the reasons that FICO is dropping a lot. If you look at the financial highlights from Q2 for FICO, you can see that scores revenue, which is the credit scoring segment of their revenue generation, came in at 297 million for Q2 25, which is more than it's the majority of their revenues. The other major source of their revenues is software. So that it's not like they're a one-stop shop, but they do have a significant source coming from their software revenues. But the majority is still almost 300 million is still from their scores. So if you look at this and they do move from a tri-merge to a bi-merge system, that means that you could effectively say a third of their revenues would be disappearing. So this would be, if it's 300 million now, then it would probably go down to 200 million if it was completely implemented. So that is a significant drop, but we still have to wait and see if that pans out, and to see what it looks like. It may not be mandatory to use only two. So maybe creditors and lenders still use three scores. So we have to be cognizant of that. Another thing I want to mention in regards to the stock drop is that there is also a potential for increased competition in the scoring business because there's talk of privatizing Fannie and Freddie. So if that happens, then there's going to be a lot more competition. A lot more companies can go in and compete for that the scoring market. So that's another headwind in FICO's wheelhouse right now. So because of those two reasons primarily, the FICO stock is dropping. But we just have to wait and see if this is warranted. I want to possibly pick up some shares because it's still a high margin business. It's a great compounding machine, excellent margins, so and revenue generation. But I want to see it drop a little bit more to pick up some shares in the public account. So another company that I think is going to be a really good investment long term and has the potential to become a multi-bagger is HCC, Warrior Met Coal. And Warrior Met Coal mines met coal, which is used for steel production. It's different from thermal coal, which is used for heat production. Warrior Met Coal is opening up a new plant, a new mine in 2026, and it's going to be fully operational in 2026. But they've already started, doing some mining and getting some production out of it. And the reason this is important is because they are a $2.5 billion company by market cap, and their free cash flow right now is fluctuating. It's going up and down due to capex spend and investing into this new mine at Blue Creek, and just operational costs and stuff like that. But once the capex spend has finished, which it will, it's not like an AI company where you have to continually invest capex to get data servers and AI things. No, here the capex spend is very defined, and it will end in 2026 when they've finished investing and completing this Blue Creek mine. When that happens, they're going to ramp up their production of met coal by an insane degree. And what this means is that they will be on par with one of the highest production companies, met coal producers out there, and that's AMR, Alpha Metallurgical Resources. With the very low levels of met coal price per ton right now, everything is depressed in this industry. Everything is depressed. So what I'm looking for is a perfect storm of sorts where the demand for met coal goes up, and the price obviously goes up with it, and the supply comes down as the supply is removed from the market as demand ramps up from India and some other places in the world that need this to develop the steel for their developing nations. And I'm looking for them to reduce their capex spend and explode their free cash flow because of all of these things. So we're possibly at the beginning of a multi-year free cash flow expansion and multiple expansion for this company, which is why I'm so excited about it. So that's the general overview for Warrior Met Coal. And the price is, you can't even look at the price because it doesn't even make sense, because they are not really doing anything. It's a commodity play, commodity and mining play. So you're really it's just going to be flat until they do their full ramp up in 2026 and beyond. So that's going to be really exciting, and I think this one is a long-term hold for years and years. But I think investors are going to be rewarded because they are going to make so much free cash flow, even maybe more than their entire market cap in like 5 years. So it's a long-term play. I think it's going to multi-bag and be a great investment. Let's move on to the next one. The last company I want to talk about is ASML, which is a Dutch multinational corporation that designs lithography machines. And a lithography machine basically creates the integrated circuits and microchips that are needed for the AI chips downstream for like NVIDIA and AMD. But it goes beyond that. They make DUV systems and EUV systems. DUV stands for deep ultraviolet lithography, and EUV is extreme ultraviolet lithography. So ASML makes both of these types of machines. Both are extremely complex and intricate. Both are very expensive. I think a EUV machine goes for around $400 to $500 million a piece. So their their customers are big corporations such as Intel, TSMC, Samsung. These customers take these machines and produce. They're the foundries, so they produce the actual chips that they're going to sell to, NVIDIA or AMD. And then NVIDIA and AMD create their own proprietary AI chips using those and pair it with their own software and then sell it to the hyperscalers like Google and Meta and Tesla and things like that. So you can see the food chain basically where ASML is at the top, and they are basically in a monopolistic zone. They're in a position where they can't be disrupted because their technology is so advanced and so intricate. No one has been able to compete with that. No one has been able to match that or even close to matching that. They spent so much in R&D that they can't even, they're thinking like 10 years in advance. So they're maintaining their lead. They're in a monopolistic uh, uh, they're operating in a monopolistic fashion because their tech is just so good. So that's the compelling argument for an investment in ASML. And I could see this company thriving for future years because of that reason. But let's look at their earnings, and you can see that. Um, let's look at their earnings, and you can see that their revenues are going to be highly predictable because they have a huge backlog from all of these customers that require these machines, basically. And it's not even a optional thing. They need these machines to operate for their foundries to create the chips that they sell to their customers. So they have a huge backlog, and that backlog creates a predictable and consistent revenue stream for ASML for years into the future. So I am very interested in buying this, and if I get a good deal on these shares or on a great dip in these shares, I will be buying these shares for the public account. So these are the type of stocks that you want to look at. Stocks with increasing revenues, increasing cash flows, free cash flows, things with competitive moats that can be around them that you can point to for a long period of time. Things that almost look like a monopoly that is very hard to disrupt that company and their business model or their business products or services. So if you can find things like that before they run up, then you have a chance to make a great deal of money. As always, none of this stuff is financial advice. You should do your due diligence in your own research when researching stocks and making investments. But I'm here to help, and please like, subscribe, and comment below. Let me know what your thoughts are on these three stocks, and if you own them or if you don't, please let me know. I would love to have a conversation with you. Thanks, guys.